to determine whether the asset comes under short-term capital gain or long-term capital gain, we have some rules and regulations. For whatever the value I purchased that property, that value is called cost of acquisition. Later on, after 1 year or after 2 years or after 5 years, I will be selling that property to someone else. So for whatever the cost you purchased your property, that cost you are supposed to write in inner column, cost of purchase. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence. Dear students, welcome to this new session. The topic income from capital gain, that is unit 1, which is there for 4th semester BCom students who comes under University of Mysuru. So if you look into the content for today's session, we will be discussing about meaning of capital gain and capital asset, type of capital asset, cost of acquisition, cost of improvement, format for computation of capital gain, and the deductions under section 54. So these are all the topics what we are going to cover in this particular session. So moving on to the topics, capital gains. Yes, first we have to understand the meaning of capital gain. Then only easily we can understand the other topics and we can solve the problems based on income from capital gain. So the meaning of capital gain, it goes like this. Simply put, any profit or gain that arises from sale of capital asset, that arises from the sale of capital asset is a capital gain. So in simple manner we can say the profit earned or the gain arised from sale of capital asset. Then what is the meaning of capital asset? So in the later on stage we will be learning about capital asset also. So any income or gain arises from sale of capital asset, it is called capital gain. And this gain or profit comes under the category income. Yes, if you are selling any property or any capital asset, from selling of that asset, whatever the amount you are going to earn, that amount is income. So that is why the profit comes under the category income, and hence you will need to pay tax for that amount in the year in which the transfer of capital asset takes place. Yes, in which year you are going to transfer the capital asset, on that year you are supposed to pay tax to the government. So why you are supposed to pay tax to the government? Because whatever the amount you are receiving by transferring the asset, the capital asset, to someone's name or to somebody else, so that value or that amount is called what? Income. So if any person is earning income, it is chargeable. So any income earned by person, it is taxable. So here you are earning income by transferring the asset from your name to somebody's name. So you are supposed to pay tax to earning the income. This is called capital gain tax, which can be short term or long term. Yes. So any profit arises from selling your capital assets, that profit is called capital gain, and on that capital gain you are supposed to pay tax to the government. So that is called capital gain. And capital gain, we have two types of capital gain, that is short term capital gain as well as long term capital gain. So moving on, capital assets. Yes, what and all items are called capital assets? If you look into that, land and building, this is called capital assets. House property is also called capital asset. Vehicles is called capital asset. Patents called capital asset. Trademarks, leasehold rights, machinery and jewelry are a few examples of capital assets. So yes, these and all items are the examples for capital asset. So why these items are called capital assets? Why this particular things like land and building, house property, vehicles, patents, trademarks, leasehold rights, why these all items called capital assets? Because this assets generates profit in our business. This assets generates profit. That is why these assets are called capital assets. So by moving on, types of capital assets. Yes, we have two types of capital assets. One is short-term capital asset. The another one is long-term capital asset. The first one is short-term capital asset. The second one is long-term capital asset. Next, long-term or short-term. Yes, to determine whether the asset comes under short-term capital gain or long-term capital gain, we have some rules and regulations. So based on those rules, we are going to decide that whether that asset comes under short-term capital gain or long-term capital gain, or we can also say short-term capital asset or long-term capital asset. First thing, immovable property. Immovable property like land and building, it is called immovable property. In case if the land and building is held by assessee for less than 24 months. In case if the land and building held by an assessee for less than 24 months, then it is called short-term capital gain or short-term capital asset. In case if the immovable property, that is land and building and other immovable properties, held by the assessee for more than 24 months, if it is held by the assessee for more than 24 months, then it is called long-term capital gain. It is called long-term capital gain or long-term capital asset. Next, listed equity shares. Yes, listed equity shares. If the listed equity shares held for less than 12 months by an assessee, then it is short-term capital asset. In case if it is held for more than 12 months, if it is held for more than 12 months by the assessee, then it is long-term capital asset. Okay. Next, unlisted shares. Unlisted shares. If it is held for less than 24 months, if it is held for less than 24 months by assessee, then it is short-term asset, short-term capital asset. In case if the unlisted shares held for more than 24 months, by the assessee, then it is called long-term capital asset. So with respect to immovable property, if the asset is held for less than 24 months, then it is short-term capital asset. If it is held for more than 24 months, it is called long-term capital asset. And with respect to listed equity shares, if the shares are held for less than 12 months, it is called short-term capital asset. If the shares are held for more than 12 months, then it is called long-term capital asset. With respect to unlisted shares, if the shares are held for less than 24 months by the assessee, it is called short-term capital asset. If the shares are held for more than 24 months, then it is called long-term capital asset. Moving on, equity mutual funds. Yes, equity mutual funds held for less than 12 months. Held for less than 12 months, it is called short-term capital asset. Held for more than 12 months, it is called long-term capital asset. Next, debt mutual funds. In debt mutual funds, if the asset is held for less than 36 months, then it is called short-term capital gain. If it is held for more than 36 months, it is called long-term capital gain. And other assets, if it is held for less than 36 months, it is called short-term capital asset. If the asset is held for more than 36 months, then it is called long-term capital asset. I'll explain once again. Equity mutual funds, less than 12 months, short-term capital asset. More than 12 months, long-term capital asset. And with respect to debt mutual funds, if the asset is held for less than 36 months, short-term capital gain. If the asset is held more than 36 months, then long-term capital asset. With respect to other assets, more than 36 months, long-term asset. Less than 36 months, short-term asset. So this is how we are going to determine the asset, whether it is a short-term asset or long-term asset. So moving on to know the meaning of cost of acquisition. To know the meaning of cost of acquisition. Cost of acquisition is the value for which the capital asset was acquired by the seller. Yes, the capital asset acquired by the seller, it is called cost of acquisition. In a simple manner, we can say I am holding a land. I have a property in my name. Okay, for whatever the value I purchased that property, that value is called cost of acquisition. Later on, after 1 year or after 2 years or after 5 years, I will be selling that property to someone else. Okay, to Mr. X. So whatever the amount I paid to purchase that property at present, that value is called cost of acquisition. So cost of acquisition is the value which the capital asset was acquired by the seller. Once again, I'll give one more example. So we have two parties, Mr. X and Mr. Y. So Mr. X is having 5 acres of land. 5 acres of land, and he acquired that land by paying 10 lakh rupees. Okay, by paying 10 lakh rupees in the year 2005. So Mr. X is holding a property of 5 acres and he purchased that property by paying 10 lakh rupees in 2005. At present year, he is selling the property to Mr. Y. In this particular year, he is selling the property to Mr. Y for rupees 50 lakhs. He is paying it to Mr. Y for rupees 50 lakhs. So what is the cost of acquisition to Mr. X? The cost of acquisition is whatever the amount paid by Mr. X, that is rupees 10 lakh. So this 10 lakh rupees is called cost of acquisition. Cost of sales, it is very simple. So cost of sale is 50 lakhs. So that is the meaning of cost of acquisition. Next, cost of improvement. Cost of improvement. So cost of improvement are the expenses. Cost of improvement are the expenses of a capital nature incurred in making any modification. Yes, any modification or changes to the capital asset by the seller. Yes. So at the duration from 2005 to till 2022, the property is going to be in the name of Mr. X. So what Mr. X will do in 2010 is going to modify the property. In 2010, he modified the property, and to modify that property, to renovate the property, he spent 5 lakh rupees. So whatever the amount spent by Mr. X to renovate the property in 2010, that value of rupees 5 lakh, whatever I say 5 lakh rupees, that 5 lakh rupees is called cost of improvement. So cost of acquisition is nothing but whatever the amount paid to purchase the property, that value is called cost of acquisition. And cost of improvement is nothing but whatever the amount paid to modify or to improve the property or to renovate the property, that is called cost of improvement. I hope you people understood these two topics. So moving on to the next thing, that is format for computation of short-term capital gain. It is format for computation of short-term capital gain. So to compute capital gain, we have two formats. One is for short-term capital gain, another format is for long-term capital gain. So under short-term capital gain, we are supposed to put 3 columns: particulars, amount, amount. We are supposed to put 3 columns: particulars, amount, amount. So under particulars column, first we have to write full value of consideration. Full value of consideration, or you can write sales value. You can write sales value, and you are supposed to take the value to the outer column. Okay, sales value or full value of consideration, you are supposed to take it to outer column. Next, less cost of purchase. So for whatever the cost you purchased your property, that cost you are supposed to write in inner column, cost of purchase. Next, cost of improvement. Yes, you are supposed to write cost of improvement in case if any expenditure made towards the renovation or modification of the property, that you have to take. So after taking these two items, you are supposed to total these two and you have to take it to outer column. Okay, you are supposed to take it to outer column. Then what you will do, from sales price, you are going to deduct this value. From sales price, you are going to deduct the value of cost of purchase and cost of improvement. You will get some balance amount. Okay, some balance amount you will get. Some balance amount, from that you are going to deduct the deductions under section 54, 54 EC and 54 F. We also have few more deductions with respect to section 54. But here I am explaining you only the important sections, that is 54, 54 EC and 54 F. So you will be deducting the deductions under section 54. Then whatever the balance you will get here, this balance is called what? This balance is called income from short-term capital gain. I hope you understood the format for short-term capital gain. So moving on to know the format for long-term capital gain. Again, we have to put three columns: particulars, amount, amount. So in particulars column, full value of consideration, full value of consideration, or you can write sales value. You can write sales value. So full value of consideration or sales value, we will be considering the value for outer column, and less indexed cost of purchase. Yes, for short-term capital gain, just we will be writing cost of purchase. But here for long-term capital gain, we are supposed to calculate the indexed cost of purchase or indexed cost of acquisition, we cannot say. Next, indexed cost of improvement, less indexed cost of improvement. So if any amount spent on improvement of the property, then you can consider that value also. So we'll take it to the outer column, the value, and we also deduct the deductions under section 54, 54 EC and 54 F. So after deducting these two values from the sales value, you will get the balance. Okay, from sales value, we are going to deduct the indexed cost of purchase or acquisition and also the indexed cost of improvement. So if you deduct these two values from this value, that is from sales value, whatever the balance gets, whatever the balance you will get, that balance is called what? Income from long-term capital gain. In short, income from LTCG. This is how we are going to compute the value of long-term capital gain, and this is the format to compute. So moving on to know about the deductions. So that is deduction under section 54. So first thing, deduction under section 54, with respect to this deduction, we have old asset and new asset concept. Okay, old asset and new asset concept. So old asset, residential property. Old asset is nothing but whatever the asset you are selling. Whatever the asset you are selling, that is called old asset. So you are selling residential property. Okay, for example, you are selling the residential property for 50 lakhs. You are selling the residential property for 50 lakhs. So cost of acquisition. So when you have purchased the property, at what price you have purchased? You have purchased by paying, say, rupees 10 lakhs. Okay, at the time of purchasing the property, you have paid 10 lakh rupees and you purchased the property, but now you are selling it to 50 lakh rupees. Okay, so now what is the difference? You are selling for 50 lakh and you have purchased it for 10 lakh rupees. So whatever the balance you will get, that is 40 lakhs. This 40 lakhs is profit for you. It is going to be profit for you, and you are supposed to pay tax on this 40 lakhs. You are supposed to pay tax on 40 lakh rupees. So to avoid paying the tax, we have deduction under section 54. Yes, if you don't want to pay tax to the government, because on long-term asset you will be paying 20% of tax. You will be paying 20% of tax. So if you calculate 20% on 40 lakhs, how much you will be getting? You will be getting nearly 8 lakhs. On 40 lakhs, you are supposed to pay 8 lakh rupees of tax. So to avoid paying tax, we have some deductions from income tax law only, right? So what is the deduction? The deduction is section 54. So here the concept is very easy. Section 54, what it says, old asset. In case if you are selling any house property, residential property, okay, for rupees 50 lakhs, if you want to avoid tax, if you purchase one more new residential house by paying this 40 lakhs, if you purchase a new residential house by paying 40 lakh rupees, then you need not to pay tax to the government. You can claim the deduction under section 54 by stating that I have sold my old residential property and I am purchasing my new residential property, and the cost of new residential property is 40 lakhs. So at that point of time, you can easily avoid paying the tax to the government. Next, section 54 EC. Old asset, any asset. You can sell anything. It need not to be a residential house. You can sell any plant and machinery. You can sell any agriculture land. Whatever the asset you want, you can sell. But you have to purchase specified bonds. Whatever the income you are going to earn by selling the property, from that income you are supposed to purchase specified bonds. Comes under capital gain. So if you are going to purchase specified bonds, then you will get deduction under section 54 EC. Next, 54 F. Old asset, any asset. You can sell any assets. Okay, you can sell any asset. And new asset, residential house. Yes, you have to purchase residential house only. You can sell any asset. If you are purchasing residential house, then you will get deduction under section 54 F. But here under section 54, the old asset should also be a residential property and new asset should also be a residential property. But under section 54 F, the old asset, any asset, but the new asset should be residential property. So this is how we are going to take the deductions under section 54 F, 54 EC and section 54. So these deductions are relating to income from capital gain. I hope all of you understood what I explained today. For more videos, keep watching. Thank you all.